Yeah, good afternoon, Agam. I think auto numbers have been in line with expectations. I think within the two-wheeler pack, I think Hero Motor has shown a very strong performance of almost 15% in the month of June. See, my sense is two-wheelers definitely have been picking up, and I think the rural market seems to be picking up pace. Maruti has also shown a very strong growth of about 12%. So I think whichever companies have got a very large rural market exposure are definitely poised to do well. I think you can look at even Mahindra and Mahindra, which reported a very strong volume growth number. On the other hand, Tata Motors, I think clearly the first quarter is always going to be a slow quarter. Sales normally pick up, from July onwards, and obviously get into a more aggressive mode, in the second half of any financial year. So we are not really concerned about such kind of negative numbers on a month-on-month basis. We believe that Tata Motors would definitely catch up both in the passenger car and the commercial vehicle segment in the quarters going forward. But overall, I think it's going to be a very solid performance from Mahindra and Mahindra, specifically from the utility and the tractor market side, and most importantly, from the two-wheeler pack. After a very long time, Hero Motor Corp has started, delivering on the numbers. We could see better kind of financials post the Q1 numbers, which are expected very soon. So net, I think the markets have already discounted this. We'll have to wait for the first quarter numbers and the commentaries from the managements going forward. That the volume growth expectation in current year, specifically from the passenger car and the two-wheeler segment, is quite strong. Companies which are largely into the two-wheeler and passenger car segment, specifically if you talk about Apollo, Seat, JK Tires, I think these are all companies which have got a large presence in the passenger car segment as well as the two-wheeler segment. I think within these companies, I think we continue to like Apollo, we continue to like Seat and JK, tires. Our sense is that raw material prices have obviously hardened because of ongoing inflation, and plus, as you rightly mentioned, crude prices have started inching again upward. So that could possibly play a little spoil sport as far as the margins are concerned. But volume growth continues to be very solid. I think the OEM numbers which came recently clearly depict that passenger car and two-wheeler segments are going to grow pretty well. The commercial vehicle segments could underperform in the very near term. But I think clearly, I think these two companies, Apollo and JK Tires, as well as Seat, could possibly outperform over the next, say, 6 to 12 months. And I think as long as raw material prices continue to remain under control, the volume growth from the OEM companies continue to be healthy in double digits, you could see a kind of a good rub-off for these companies continuing ahead, despite the fact that base levels for most of these stocks have now significantly gone up. So I think the incremental upside would be a little limited. But yes, definitely, I think one could expect a decent risk reward in the next, say, 6 to 12 months. I think, Agam, this rule actually, is negative for broking companies which generate a lot of volumes. And I think, earlier the incentive structure was based on the volume generated. But now with the new rule, I think it's going to be one, kind of slab applicable for all the participants. So I think in a way it's going to be, hurtful for most of the discount brokerage houses, for the large brokerage houses which were generating huge volumes and were getting incentives. So now I think obviously that is going to hurt their profitability quite significantly, because as per reports, what I've been understood is that almost 40 to 50,000 crores of business was generated by the discount brokerage houses, and that now is not going to entitle them to any incentive or the structure which was available in the past. I think what SEBI has done is right. I think they have ensured that it's a fair play for all the brokers. The smaller brokers would obviously benefit, but bigger names like Angel One, Five Paisa, or for that reason, other broking houses like Motilal Oswal could get impacted, because obviously the volume incentive is now no longer going to be there, because it's going to be one, stable structure and one, rate which is going to be applicable to all them. So I think in the very near term, you could see some selling pressure, and I think the impact of this could really be felt, in the second quarter of financial year FY25, because now I think with the volume structure going out, I think incentive structure obviously reduces. That is obviously going to eat into the margins. So short term, it's a negative for these companies. For the exchanges, I don't think it's going to be negative, because exchanges will not have that kind of impact. And as far as CDSL is concerned, you rightly mentioned, Agam, it's a depository, so I don't think it's going to have any impact on their business or any on their profitability at all. So I think CDSL definitely has gone down purely on market sentiment. And in fact, today the company is having its board meeting for the bonus issue, which I think the market is keenly awaiting. No, I think Kagam, this deal is definitely value accretive for the shareholders of Patanjali. I think they get the non-food business at a reasonably good level at 2 times, end of EBITDA, and almost, I think 2,800 crores of top line gets added to the balance sheet, on an annual basis. And I think the most important part is that growing segments like dental care, skin care, health, hair care, all these segments are growing segments. So I think in a way, the promoter has actually given a decent valuation and has offered a kind of a growth quotient to Patanjali Foods. This impact of all these acquisitions, once they get accounted in the numbers, would obviously be felt in FY25. But I think today the stock has corrected largely because of the market sentiment. But otherwise, the deal is pretty good. Investors who want to take a 12 to 18-month call could definitely look at this company, because I think in terms of the revenue scalability, in terms of the product, popularity and the margins have been in fact in some cases better than Dabur and Imami. And I think overall, I think the company is also going to make a conscious effort to improve these margins. In fact, the company will be having a conference call and analyst meet today at 4 o'clock. So I think markets will be very keen to know how the
Right.
profitability levels are going to be scaled up going ahead. So I think net it's a good deal. I think investors should obviously accumulate the stock with a long term
Hmm.
horizon.